Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report, 12 noon, halfway through the trading session, and as we speak, just about 5 or 6 points once again from hitting our all-time high that we scaled early in the morning. Pretty steady. We saw a bit of profit taking after we scaled it early in the morning, but then since then we've recovered a tad bit. So hovering close to that.
Absolutely, and it's expiry day, so expect some fireworks, particularly in the last couple of hours of the trading session. I think roughly around 12% to 13% of the nifty companies, of the weightage on the companies, they'll be reacting to numbers today. So quite interesting. The mid caps, though, they've come off a tad bit from the day's high. We'll talk about
then to our movers and shakers segment, where we highlight all the stocks that are moving and shaking at noon, and on to Shriram Transport, which is showing you good gains on the back of good growth numbers. Abhishek?
To begin with, Rima, they have shown a very strong disbursement growth. As per my sources, the disbursement growth is between 24 to 25%. You look at the AUM, for the first time it has crossed the 1 lakh crore mark, and that is up by more than 22% on a YOY basis. The NII growth due to the IND-AS reporting has come in at 1,840 crore. That's up about 20% on a YOY basis, while the profit growth as per IND-AS basis is at 572 crores. That has grown more than 24% on a YOY basis. So overall, the gross NPA, as per my sources, have improved sequentially. Just to highlight our viewers, the gross NPA ratio in the previous quarter was at 9.15%. Back to you.
Okay, all right. Thanks so much for that, Abhishek. Well, Ambuja Cements, that's running away in today's trading session. That's because the numbers were better than what the street was working with. Remember, yesterday we had a bit of a penalty that was imposed on some of these cement makers, and they ended lower, which was a good thing because today the stock gets to react to those numbers. It came in with a top-line growth of around 5.5% approximately. Remember, that's because realizations were higher, because volumes came in bang in line with what we were working with at around 6.4 million tons. That's the pleasant surprise. Realizations jumping by around 3% on a sequential basis, and their premium product sales, the likes of the roofing products, that's done quite well as well. That explains why we had a bit of a beat on the top line. Now, margins, we are working with a compression of around 450 basis points odd. The margins compressed by only around 200 basis points, telling you that some part of operating leverage as well played out, and they got some kind of cushion from higher realizations. Other expenditure, that came in low by around 6%. When you have a volume growth of around 4%, and you have other expenditure coming down by around 6%, telling you on a per ton basis, other expenditure was down by nearly around 10%. Good operational performance told you that there was a big beat on the profitability front. In addition to that, you had higher other income and lower taxes. Brokerages, they like the numbers. Only thing they are cautious on one thing: where is the growth going to come from? So Deutsche Bank, they have a hold rating. They're saying that because they don't know where the growth is going to come from, they're expecting some market share loss. You have Morgan Stanley as well. The near-term growth is capped over there. That's why, in fact, they have an underweight rating out there with a target price of around 263 rupees. And Nomura, they maintain a neutral rating. They're saying they'd rather go in for Ultratech Cement or, in fact, Shri Cement as well. That explains why today Ambuja Cements up close to around 8%.
Okay, strong realization spurring Ambuja Cement, and earlier this week even ACC. Abhishek, very strong numbers coming in from Canara Bank. It's lifted the spirits of the other banks too.
Well, Rima, to begin with, the top-line growth is so strong that it beat our poll by 29%. So the NII was at 3,883 crore. That grew about 43% on a YOY basis and about 30% on a sequential basis. They reported a profit of 282 crore versus our poll of a loss of 1,000 plus crore. So overall, the net interest margin due to this robust P&L growth actually was at 11-quarter high. Both the global NIM and the domestic NIM. Loan growth was pretty strong. You look at the global loan growth was at 12.7%, but the domestic loan growth for the first time crossed the 15% level. One key worry remains that the slippages are still high. So the slippage ratio is at 4.35%. MSE slippages led to a spike in slippages for the current quarter. Back to you.
All right, thank you very much for that. CESC Q1 numbers on your screen.
The profit number looks like a bit of a miss, actually.
Yeah, we were expecting 209 crores, but those were just estimates. It wasn't a poll of too many brokerages. But even then, 182 crore is slightly lower than what the street was anticipating. Revenues have come down by 1.1%. That was expected. We were expecting a bit of a revenue decline. I think the key that the street is now watching, will be when they will be, listing the demerged entities and unlock profit, unlock value. So that will be the key to watch. The stock has now dipped into the red, a bit of a profit miss, it appears.
Okay, all right. Let's move on then with the movers and shakers segment. You might want to tell us about Intellect Design?
Yes, so it's a weak performance. Revenues and margins have missed expectations. The key reason for the revenue miss is because there was a deferral of 2 large deals with a total value of 17.4 crores. On account of that, the revenues declined by 6.5% in dollar terms, and margins too came down to 4% versus 8%. The profit is showing you a big jump of 43 crore versus 26 crore, and that's because it was boosted by a sale of property in Hyderabad. Now, if you look at the adjustment post the deferral of sale, even if I add back 17.4 crores, even then I'm actually getting a dollar revenue growth which has come down marginally on a quarter-on-quarter basis. That said, we spoke to the management earlier today. They sounded confident. They said we are poised to achieve a 20% growth in FY19 and with doubling of the EBITDA. So that's about Intellect. Okay,
all right. Let's do a quick recap then of all the buzzing stocks that we just covered. We have Shriram Transport, Ambuja Cement, Canara Bank, Intellect Design.
All right, let's shift focus then to the big CNBC TV18 exclusive now. We told you last week about Hindalco's likely big acquisition of Aleris International, and now sources tell us that it is likely to be announced today. 4 o'clock post-market hours. Nisha Poddar has been tracking the story right from the very beginning. She joins in with the key details. Nisha?
Thanks for that. Yes, that particular big announcement is expected today, and we have been saying that as well. So it's been over a decade since Kumar Mangalam Birla first bought Novelis. Now he is heading overseas to make another big acquisition in the United States of America, and that is of Aleris, worth about $2.5 billion. Now that will be a mix of debt as well as cash. Debt of about $1.8 billion from Aleris International can be taken over, and $700 to $800 million of cash reserves from Hindalco Aleris can be really paid off. Oaktree Capital, Apollo Global are some of the private equity players who can really get an exit through this particular transaction. It cannot be ruled out that for equity funding requirements, Hindalco may explore the opportunity of an ADR listing as well. Let's go straight across to the inside story. Why is Hindalco keen on Aleris and this buyout? They have been saying in their annual report that aluminium is becoming a big material for the automakers, and the demand is rising at the moment. They're trying to capture that particular demand, and therefore the strategy over the last few years that we have seen, in which they have increased their product portfolio from about 9% in automotive body products to about 20% now, and that is set to increase now. Also take a look at the industry outlook. That shows that the mainstay of Novelis, that is the cans business with 60% of the revenues currently, is not going to grow at such a faster pace as the automotive body. And that's precisely the reason why Aleris comes into the picture for Novelis. So take a look at that particular bit, that they are looking at expanding and ramping up the automotive body product portfolio from the buyout of Aleris. So taking a look at the segment revenue coming in for Aleris, well, automotive is a big piece, and that is set to ramp up with the Kentucky plant also commissioning very soon. Apart from that, construction as well as aerospace. So defense is one area in which Hindalco really wanted to enter through Novelis in the product portfolio of aluminium, and that's where this particular bit comes in. Not just that, in terms of global footprint as well. North America is the biggest market for Novelis, and they're going to strengthen the position by buying out the competition, Aleris, and also European markets. So this is the breakup of their geographical footprint as well. So that defines the whole synergistic benefit coming in for Novelis. But as far as valuations are concerned, well, it looks like very stretched when you compare it with CY17 EBITDA numbers, but in forward earnings, CY19 estimated earnings, it is pretty much in line with the industry trends. Back to you.
Well, thanks so much for that, Nisha. Well, Hindalco is at the low point of the day. Remember, Nisha has reported that, in fact, today we're likely to hear out in terms of that deal. So just take a look at the intraday chart of the stock. It's moved to the low point of the day. Just wondering, whether or not what happened with UPL, is that distinctly possible as well? Because remember, the biggest overhang on the stock was this particular deal. Will Hindalco go for a large acquisition? Some part of the street believes that it will make sense. The stock is corrected from around 285 rupees all the way to around 200 rupees. In fact, after Nisha broke the story last week, it had corrected all the way to around 190 rupees. From there, it's seen a bit of a bounce. So let's see, when this deal comes out, whether or not it's a favorable, buy, and has the street priced in all the bad news. We'll have to wait by. Remember, with regard to UPL as well, everyone was fearing the big acquisition. And on that day, we know what happened. I mean, not saying that anything like that can happen, but it's the biggest overhang on this stock, and the biggest reason why the stock has corrected close to around 30% from the top has been the overhang of this deal. But let's move on then. Shriram City Union, that's the stock in focus on the back of a mixed set of numbers that we got in the past quarter. They saw strong AUM growth, but the housing finance NPAs were the highest we have seen actually. We have with us Mr. Lakshmi Narasimhan, the Executive Director of the company, who joins us. Hi, Mr. Lakshmi Narasimhan. Thanks so much, sir, for joining in. Wanted to focus, sir, on your NIMs first. It's come down to around 13.4% from around 14.4%. Now, if there's a rising interest rate scenario, do you think the NIMs can take some pressure? And also, if you could break up your borrowing mix for us.
Yeah, so I think first thing, the NIM is likely to hold at the existing levels. Essentially, from a perspective of close to 60% of the borrowing is fixed in nature. The balance 20% comes in through the retail deposits, which again is quite sticky in terms of cost and money. So I think in terms of the net yields, we will kind of remain at the existing levels, even though we are guided for a 50 basis point drop at the beginning of the financial year. I think that's all baked in our existing guidance. That, coupled with the fact of we expect to increase the lending rate for certain segment of customers by about 25-30 basis points. That should kind of hold us good for the full year. Yeah.
Okay. Mr. Narasimhan, afternoon. Thanks so much for joining in. Let me come to your housing finance subsidiaries. There we've seen your asset quality deteriorate. For instance, your gross NPAs 2 years ago in the housing finance business was close to about 3.95%, which has now increased to 6.4% as of the last quarter. If you could tell us what is going on there and what is the trajectory from here on?
Yeah, I think essentially housing finance contributes close to about 8% of the consolidated loan book. We have kind of re-strategized the housing finance business, so we should start seeing appropriate numbers from Q4 of this financial year, because Q3 is when we implement our plan. The good part of the gross NPAs that we have seen has come in from the construction finance sector in the book. I think it's transitory in nature as much as it was in the past quarters. Once the loan book actually starts growing towards regular levels, the percentages will automatically start looking different. So our strategy on the housing finance would continue to remain in the affordable housing segment, coupled with some LAP, which will be marginal in the overall loan book. So we should get back our strategy on the housing loan probably by the end of Q4 this financial year.
Okay, so what is your target loan growth or disbursement growth for the housing finance business?
We have guided for a 25 to 30% loan book growth on the housing finance for the year.
Okay.
Okay, all right. And you believe that the asset quality won't worsen from here?
That's right.
All right. Sir, I also want to ask you about your small enterprise business. That's the SME business. I think the AUM growth is around 25%, 26% on a year-on-year basis. We have had a couple of banking names, Kotak Mahindra Bank, you had South Indian Bank, various other banks. They were sounding cautious in terms of SME lending. If you could tell us, are you seeing any, any signs of pressure on some of those loans out there?
Yeah, so there's a fundamental difference between what banks call as SME and what we call as SME. Our loans, essentially 80% of the loan book that we give are in the ticket size of 8 to 10 lakhs.
Okay.
And they form traders and service providers. So there is really no connection to what the bank calls as SME and what we call as SME.
Okay.
There we have seen good traction, one in terms of loan pickup as well as portfolio quality. We did see some impact post demonetization, but I think in the existing numbers that we have, all that is baked in fully. So we're not seeing too much of a problem in terms of collection efficiencies in that segment at this point in time.
Okay. What is your overall guidance on asset quality on the gross NPAs going ahead for the consolidated business?
I think we've all moved to Ind AS now. So gross NPA is one number that gets tracked by the market, but not really too relevant from an NBFC perspective at this point in time. Having said that, our gross NPA, for numbers' sake, has dropped from 9% to 8.9% between March and June. We expect that to continue to drag down as we go forward. But our overall write-offs will remain in the region of about 2 quarter, which is what we have reflected over the past 10 years.